The historically low interest rates are no more. The Fed plans to continue to raise rates through the summer. So, what do you do if you're looking at new construction? You qualified for this rate and the ratios were in. However, the rates are going up and you might not qualify and be able to close on your home. I've had a few clients going through the same thing. And here's the tips that I give them, kind of guiding them through to make sure that we get to close on that home 6 months out from now. Stay tuned. What's going on, everyone? My name is Brandon Holley with Holley Homes Realty here in Austin, Texas. And today I'm bringing you some really important information about interest rates and how that's going to affect you if you are purchasing new construction. It'll affect you no matter what, but obviously new construction is being pushed 6 to 8 months out for build times, and a lot can change between now and then. And what I'm finding for a lot of my clients is they were approved and ready to purchase the home back in January. And now all of a sudden the interest rates are trending up. The lender is coming back and telling them, oh, we're not in the right ratios. We're not going to be able to close on the home, which is an extreme heartbreak for you as the buyer. Also for us as the real estate agents, we want to see you in that home. We want to help you out. So here's a few tips that you can use to hopefully leverage yourself to be able to still close on that home if it's 6 to 8 months out. But first, let's figure out and understand why these rising interest rates, how that's going to change your monthly mortgage and affect you. All right. So you locked the rate when it was at a historic low back in January. However, closing is not until after July, and you can't lock until 30 days before closing. Let's take a look at this example right here to kind of get a better idea of how that will affect your monthly mortgage. All right, you're approved for a $500,000 home at a 3.11% interest rate. That would have given your monthly mortgage payment to be $2,138. However, interest rates have risen and you get locked in at 4.67. Now your monthly mortgage payment is $2,584, which unfortunately will put a lot of people out of the correct ratio to be able to close on that home. You've taken out a mortgage before, you know it's made up of four things: principal, interest, taxes, and insurance. And out of those four things, principal and interest make up a huge, huge part of that monthly payment. And if you're looking at an amortization scale, which is an extremely hard word for me to say, you'll notice that out of those two payments, you're paying more towards interest each month than you are the principal. That's obviously because the lender wants to make their money back before you get to start building equity on that home. So as you can see, the interest rate is an extremely important part of your mortgage payment. And if you are looking at new construction and you cannot lock in your rate yet, what are some things that you can do to be proactive? What are the questions that you need to ask the lender to ensure that when closing date comes, you still fall in between your debt to income ratio and are able to close? Here are those tips. All right, remember to always speak to a mortgage professional to ensure that you're doing what's best for you. But my first tip would be talk to the lender beforehand right now, even though you're 6 months out, whatever, before closing, and see if they can lock that rate in, see how much that would cost. If that preferred lender is not able to lock the rate, go talk to another lender, see if they're able to. There are lenders out there that can lock 6 months out. And if that's the case, it is well worth missing out on that $7,000 incentive for closing costs to ensure that you save what could be $150,000 on the life of the loan. Another option is to buy down points. So what this means is it allows a borrower to obtain a lower interest rate by buying discount points. Let's take a look at how this works. For example, a mortgage lender may offer a purchaser the ability to reduce their interest rate by 0.25% in exchange for a point. So if the purchaser is obtaining a mortgage for $400,000 and is offered an interest rate of 4%, paying $4,000 would lower that interest rate to 3.75%. All right, so this last option is why it is so important to have a real estate agent on your side in any real estate transaction that you're a part of. And that's because as a realtor, you can give a bit of your commission to the buyer in order to make sure it closes, whether that's to help with closing cost or if that's to help to buy down points, whatever it is. Obviously, we are there to help you get to the finish line and whatever it takes. I personally, I don't know about all real estate agents, but I'm happy to do that for my clients. And if it's definitely the difference between closing and not closing, I will guarantee you the most agents will do that. Interest rates are expected to continue to rise through July. So what does that mean for you? What does that look like historically? Kind of where do rates now match up with where they were in the past? Let's take a look at a graph right now showing what interest rates were over the past 50 years. So here you can see historically since 1975, interest rates have remained around about 8%, with the highest being back in 1981, where it was 18.63%, and the lowest being January of 2021, where it was 2.65%. However, looking back to 1981, I mean, the median home price is probably around $80,000. So it definitely changes the way we look at things, affordability. And I really don't have the answer of how to help you with that, other than I will continue to push new construction because I think it's a great way for clients, for buyers to be able to get into a house in this market. I hope this gives you some information on what to expect in the coming months with interest rates. It's going to be difficult. It's going to price a lot of people out of the market, but I don't want it to be you. If you are 6 months out from closing, talk to your lender, talk to your real estate agent, make sure that you have an option moving forward to ensure that you're going to close on your property. Like I said, there's ways around it. You might really need that closing cost that the preferred lender of the builder gives you, but there's other ways around it. Again, talk to the people that know what they're doing, get a second quote, get a second opinion, and please, good luck. And if you have any questions, please reach out to me. Thank you again for watching. And if you have questions, drop a comment below. Please hit like and subscribe. And if you're interested in new construction, check out my new community guide below.